Let's talk about the economy. Because if you look at the news, things are not looking good. You might be tempted to think that the entire economy is literally on the brink of collapse. I mean, if you look at inflation, it's... The pandemic is still affecting economies. The Chinese real estate market is crashing. Interest rate hikes are at absurdly high levels. Well, if you want to invest in these trying times and try to even get a positive return somehow in crashing markets, then this is the best advice I can give you. Here are a few options that you can throw your money at and watch it snowball into something huge over time. My name is Noah, and I like babbling on and on about investing and personal finance. If you want to join me on my path to learning more about the markets and how stocks work, then just leave a like and subscribe. I won't keep you waiting any longer. Let's get right into it. So before we can talk about your investing options, we have to look at the state of the financial markets right now. So, when new music drops or when a new album drops, it's usually a good thing. But when the latest inflation reports drop, that's not something you're supposed to be looking forward to. Especially not this September, because oh boy, it was bad. September inflation was at 8.2%. And because Wall Street always makes so much sense, the stock market rallied on Thursday, the day that this report was released, because blue chip companies like Pepsi and BlackRock and Walmart reported crazy good earnings. So it was the best day in the market in the entire year. That makes no sense. I don't know what's going on, but it's crazy right now. Like I said, it was the best day in the market. Every stock in the Dow closed in the green, and it was up 2.8%. Now you might be asking, how is that possible with crazy inflation rates? Well, the markets are driven by human psychology, and people lately, if there's any good news, they grab onto that and the markets go crazy. And some of the best single day gains are actually in the middle of bear markets. And quick disclaimer, I'm not a financial advisor. I actually have no idea what I'm talking about, so this is not financial advice, and I'm not trying to sell you anything. I'm just doing this for fun because I enjoy talking about this. So yeah, quick disclaimer in the middle of there. So with that out of the way, I don't think we've hit the bottom yet. I think there's still lots of downhill to go, and yeah, with an inflation report like we saw last week, I think this bear market could go well into 2023, as well as the interest rate hikes, which will most probably be going all the way into 2023. The US Federal Reserve Bank will probably not stop raising interest rates until inflation is back to the goal of 2%, which is gonna take a while. And more news. Last week there was the OPEC Plus meeting. It's an organization of companies that produce oil. And because they're so nice to everyone, they decided to reduce the production of oil to drive the prices higher, because oil prices were going down. So they decided, if we produce less, there's going to be less supply, which means we can sell the oil that we do get for more. Yeah, so that's really nice. You thought gas would be affordable again soon? Well, think again. Anyways, as long as the Fed increases rates, crypto is not going to rally and meme stocks are not coming back. However, the average bear market has lasted just around 289 days. This bear market has been going on for about 130 days so far. If you look at historical data, then we still have a way to go too. Two more things I want to mention is the fear and greed index and the Buffett indicator. So you can look at those online. And historically, if you look at the Buffett indicator, which is the total GDP of a country divided by the total market value, you see that overall, historically, the market is still overvalued. So there's still some way to go down. The fear and greed index, like Warren Buffett says, be greedy when others are fearful, and fearful when others are greedy. And right now, as you can see, many people think it's not a good time to be investing, but now is the time when you get the discounts on the good stuff. Yeah, it's definitely worth it. And now I want to go on to talk about where you can put your money, how you can grow your wealth even in these turbulent times. So number one, high yield savings accounts and home savers accounts. So depending on where you live, Your bank might be offering you services such as a home owner saving account, which in Finland, where I am right now, yields a 4% interest rate. But there are all sorts of special requirements. Not allowed to withdraw the money, you're only allowed to deposit a certain amount, and all the money has to go towards buying a house. So if you want to buy a house and you want to become a homeowner, that's a great investment. It's basically guaranteed 4% return, which is much better than what we can say about the stock market right now. And just generally, because interest rates are rising, that does mean that interest rates on savings accounts are also rising, which means you might want to look into that and see if your bank offers any good savings accounts with decent interest rates. Let's move on to number 2. So, bonds. Should you invest in bonds now that interest rates are rising? Well, there's one thing that you have to understand about bonds, and that is if interest rates are going up, then the price has to go down to match the coupon, which is what you're getting paid out by owning the bond. For that to stay the same, when the interest rate is going up, the price has to go down. Which means if interest rates keep on going up, the value of the bond will keep on going down. So when the rate increases, the price drops. And that's why bonds have been falling this year along with stocks. But for example, if you own a bond that is worth 100 euros and you have a 2% interest rate on it, then you get paid out 2 euros. If the interest rates are rising and now suddenly this bond is giving you a 4% yield, the payout is still only 2 euros. That means that the price has to be 50 euros now. You see what I mean? Hope that makes sense. Now, let's move on. Bonds are for old people anyway. Am I right? I don't know. But yeah, ETFs and index funds, you can never go wrong with them. It's a basket of stocks. You own a lot of companies. You can buy an entire stock market fund. You can buy an S&P 500 fund, which is the 500 biggest stocks in the US. Just remember to dollar cost average, especially in recessions when the stock market is trending downwards. If you buy in at regular intervals, then you'll get an average price that is pretty good. And then when the stock market rallies again, you're going to see pretty nice returns, especially if you buy a lot now that it's going down. Even though it might seem scary and you might be making losses initially. Yeah, if you look at the historical data over time and on average, you should be making a profit with these. Number 4, my personal favorite, even though it's not been looking good this year, dividend stocks. Now you can never really go wrong with dividend stocks because, yeah, remember, be fearful when others are greedy and greedy when others are fearful. And right now people are fearful, and that's why it's a great time to invest in blue chip stocks that pay out reliable dividends at a discounted price. I kind of learned it the hard way that it's not good to invest when everyone else is investing too, because I happened to turn 18 in October and November was basically when crypto and the entire market peaked. So that's when I started buying and things have not been looking good. But it's okay. I'm fine. Don't worry. Anyways, right now you have a way better place to start from. The markets are already down, like 20-30% since the last peak, which means it's like getting a 20 to 30% discount on the stocks you're buying. But as I already mentioned, top analysts aren't expecting the rate increases to stop until earliest spring of 2023. That means that asset prices will take some time to recover. But the longest recession in history until now lasted 18 months. And the longest bull run has lasted for 128 months. So overall, this should be over soon enough, and then we should be back seeing the green numbers going up, shooting for the moon. But also remember that past performance can never predict future results. And that's why I want to talk about one more thing. Number 5, fifth option for investing right now is to look overseas. And if you live in America, you might not want to only invest in the American stock market. If you live in Europe, you might not only want to invest in your own country. But for example, I've started looking into India and the Indian stock market because India's population is growing and soon they're going to overtake China, and Apple has started producing iPhones in India instead of China. And it seems that there's this shift from having China as the world's factory, and that role is shifting over to India. So I'm not comfortable investing in Asian markets yet because I just don't understand it enough. But it's definitely worth it to look into it and research it, and maybe the returns in these emerging markets are better than in Western economies. But I'm not really qualified to judge that yet, but I'll keep you updated on that if you're interested. To sum this all up, so in recessions it's important to have a juicy cash pile saved up just in case of unexpected emergencies. And cash can always be put into the market when prices are extra low, so you're getting that discount. But you can't do that if you don't have a pile of cash to put in when the time is right. Although it's impossible to time the market, and timing the market beats timing the market. But yeah, there are lots of choices, as you can see, ranging from risky assets to less risky assets. And especially in volatile markets like this, it's important to do your own research and know what you're investing in, and just be aware of where your money actually is going. I think that's all I want to tell you today. Thanks for watching. I hope you know more than you did a couple minutes ago, and I can't wait to see you in my next video. And if you did enjoy this, then go ahead and just leave a like and subscribe. One more thing before I go. I know this video is like not very good quality, and I just like talking. I want to learn how to video edit properly, so that's why I thought I might as well share these just because. So yeah, I think that's all I want to say. I hope you have a great day, and I'll see you in the next video. Bye.